Hi, I'm Zarafa Boram, and this is my channel. This channel has been specially designed in order to contribute videos with regard to the subject of commerce, scaling from the subjects of accounting, economics, business studies, to even more broader subjects like studying about TNCs, about management accounting, etc. Thereby, this channel caters the needs of students attending school up to the postgraduate level. Hope that you will enjoy my videos and hope my knowledge will be shared across the world, making the maximum use of it. So just for you to get some kind of an idea about the videos that I have uploaded thus far, considering my video list, these are some of my videos which I have uploaded over the past few years, and today actually I'm bringing forward much more requested video regarding the IGCSE O-level accounting past paper discussion, since we have just a couple of months heading with the June examinations of 2019. Hope you enjoy my videos, and do not forget to subscribe to the channel and post your comments if any. Considering section B of 2018 June paper, question number 11, it says, Justin Horan, a trader, maintains a full set of accounting books. On 1st of April, he provided the following information. So according to this question, Justin Horan is the owner of the business. And on the 1st of April 2018, these are the balances that are available. So sales ledger balances, that mean these are the balances of the trade receivables or the debtors. And nominal ledger balances, these are the balances in these particular total accounts. So the following are extracts from Justin's books for April 2018, and VAT is charged at 10%. So they have given us the extract of sales journal, return inwards journal, and the cash book and the general journal for the month of April 2018. The question is asking us to prepare the following accounts in the books of Justin Horan for the month of April 2018. Balance the accounts on 30th April 2018 and bring the balances down to 1st of May 2018. So whenever you get a question like this, first you have to identify whether this particular T account or ledger account that we have to prepare is an asset, liability, or what is the category. If you take CSUN, as we identified before, CSUN is a trade receivable because his balance can be found in the sales ledger. Therefore, when we prepare CSUN's account, the first step is that we take the opening balance. Since he is a trade receivable, the balance on CSUN's account will be on the debit side. So on 1st of April 2018, we have the balance brought forward on CSUN's account as 1,800. So this is what you will have, 1,800. So if you write that properly, you would get 1 mark. Okay. After you enter the opening balance, next you have to go through the rest of the question and see what are the other figures relevant to CSUN. As you can see, in the sales journal, we have CSUN mentioned on April 13th. So on April 13th, CSUN has bought goods worth 572. In other words, we have the trader, Justin, has sold 572 pounds worth goods to CSUN. So when Justin sells more goods to CSUN, CSUN has to pay more. Therefore, the trade receivables value increases. So CSUN's account should be debited, since asset increases are debited. So on the debit side of CSUN's T account, we have the date April 13th. It's a sale, so we put sales, and the figure is 572. The figure is always the total figure that we have to consider. Moving from sales, consider the next journal. The written inwards journal has CSUN mentioned on April 3rd. So on April 3rd, there is a return inward from CSUN worth 99. When CSUN returned goods to us, the amount he has to pay us reduces. Therefore, his account should be credited since asset decreases are credited. So CSUN's account on the credit side we have on April 3rd return inwards, and the figure will be 99. Considering the rest of the question after returning inwards, we move on to the cash book. In cash book, you can see this is an extract of only the debit side, which means only what we have received is mentioned here. So on April 30th, we have received 1,280 from CSUN. What does this indicate? It actually indicates that CSUN has paid us 1,280 pounds. So when a trade receivable pays us, the correct double entry goes as cash book debit and the particular trade receivable credit. So in this case, CSUN should be credited on April 30th as cash 1,280. Thereafter, we have the journal. As you can see, on April 21st, CSUN purchases ledger debit, CSUN sales ledger credit. So this is a contra entry because it clearly indicates that it's a transfer of balance in purchase ledger offset against the balance in the sales ledger. So set-offs or offsets are normally reduced in the D account. So CSUN's account is reduced in the sense it is credited. So on April 21st, we have set-off 450. One key thing that we got to remember in this is that always, whenever you prepare a D account, remember that the data entries need not be done in order. You can first enter the cash book figure, leave space for the set-offs and then enter it. But make sure that the way you have entered it reflects the date order. Say for example, April 13th transaction cannot come before April 1st. The April 30th transaction cannot come before 21st. You can enter it before, but when you present it, it should be below the set-offs. After recording all of that, the question asks us to balance the account and bring the balances down. So when you balance it, what you got to do is you take the total of the debit side and the total of the credit side. So the debit side total, if you take, you have 1,800 plus 572. That gives us 2,372. In the credit side, we have 99, 450, 1,280, which gives us 1,829. So out of the two totals, the debit side is higher, so we take it to both sides, as you can see. And then to calculate the balance carried down, what we need to do is we have to take the difference between the credit side and the debit side. That gives us 543. So balance carried down will come to the lower side, which is the credit side, and balance brought down will come down to the next month beginning as balance brought down. Okay, so as shown within brackets, the number of marks are indicated. So if this T account is done properly, you can score 6 marks. Considering the part 2 tells us to prepare the sales ledger control account. So actually, sales ledger control account is a summary of all the totals relevant to the debtors or to the trade receivables. So to complete the sales ledger control account, first of all, we need to see the total balances in our sales ledger. So as you can see, at the beginning of the question, they told us that on 1st of April 2018, the sales ledger balances are these. So in order to calculate the total of the opening balance, what we got to do is we need to add up each of these balances. So we have 1321, 2564, 1800, 1789. That gives us 7474. So since trade receivables are assets, on the debit side of the sales ledger control account, we have to record them as 1st of April, balance brought forward. So as you can see, that's how this comes in. April 1st, balance brought down is 7474. Next, we have to move on to the next piece of information relevant to trade receivables. After entering the opening balance, the next thing we got to consider is the sales journal. In the sales journal, we have a total of 4,235. This is the total amount the trade receivables owe us. So when the trade receivables owe us, the amount that they have to pay increases. Therefore, the sales value should be debited in the sales ledger control account. So on April 30th, sales, the figure will be 4235, the total figure. Next, we take the return inwards because it is also relevant to the trade receivables. So when trade receivables return goods to us, the amount they have to pay reduces. Therefore, the figure of 385 should be created. We need to remember that always when we record these totals, the date that we use is the end of the month, since the transfers of the totals take place at the end of the month to the control account. So, as you can see on April 30th, you have return inwards 385. If several transactions are on the same date, you need not repeat the date, as you can see here. Next, after return inwards, we need to take the cash book. Cash book indicates all the cash received, but this doesn't indicate all the transactions related to trade receivables. Therefore, when you take the cash book figure, you are supposed to pick only the ones related to our trade receivables. So first of all, let's see who are our trade receivables. Alda, Shah, Sun and Wong. So if you have any transaction relevant to them, then yes, you have to take them. So we have Alda 3244. Then we have Wong 2000. We have Bisha 2188 and C-Sun 1280, giving us a total of 8712. When the trade receivables pay us, the amount they have to pay in future reduces, so therefore the cash received should be credited. So the cash book figure is credited 8712, as you could see. Next, we move on to the journal. We have a set off. So in the sales ledger control account, we have to credit it as per the journal entry. So we credit the sales ledger as set offs 450. After entering all of these transactions, since we have no more to enter, we have to get the totals of both the debit and credit sides. So when we take the total of the debit side, we get 7474 plus 4235, which gives us 11709. The credit side, we get 450 plus 385 plus 8712, giving us 9547. Since the debit side is higher than the credit side, we put the debit side total to both the sides and then we get the difference. The difference will indicate the balance carried down, which is 2162, which comes to the lower side. Balance carried down at the end of a certain month becomes the balance brought down in the next month. So you have to be very careful when you do this question, because marks are awarded for the correct date, details and the amounts in combination. So even if you don't enter any one of them, you would not get the marks. So that's part 2. Part 3, you need to prepare the sales account. So as you could remember, at the beginning of the question, they gave us the balances of the sales account. So we have an opening balance of 21,000. So in the sales account, we got to record it April 1st, balance brought down 21,000. The reason why we have it on the credit side is because sales is an income account. So balance brought forward of an income account comes on the credit side. Next, after entering the opening balance, we take the total of the sales journal. Now we have to be very careful because we only take the total of the goods column for the sales account. So when sales increases, income increases. Therefore, sales account should be credited with this total. So it will be credited on April 30th as sales 3,850. So once again, as I said in the previous question, when you have a transaction entered at the end of the month, always leave space for any other transactions and enter it. Then, after recording the sales journal total, we take the return inwards. Return inwards is actually not recorded in the sales account, therefore it's not a problem to us. Next, we consider the cash book. The sales transaction related here is the cash sale, because sales include both credit sales and cash sales. The sales journal only records credit sales, but the cash book records cash sales. So therefore, the cash sales banked, including VAT, is 660. Now we have to be very careful because they say including VAT, and previously they had given us that VAT is charged at 10%. So we have to use a simple equation and solve it. If you consider an equation for this, you will have a certain value. Let's think the value is V multiplied by 10% will give us the VAT. That's what the question says. So when it comes to cash sales, the way we calculate is the value of V plus the VAT. So now we know that it is 660 and we do not know V, but we know that VAT is 10% of V, that is 0.1 V. So to solve V, what we have to do is we have to divide 660 by 1.1. This will give us 600. So the value of the sale is 600 pounds. So the cash sale value should be 600 pounds. So when we sell goods, once again, it is created since it's an income. So as you can see, on April 15th, cash book, the figure is 600. If you have written 600 correctly, you'll get 2 marks. If you wrote 660, you'll get only 1 mark, indicating it's a wrong figure, but you have understood the logic. So even 1 mark can make a difference between a level 9 grade and a level 8 grade. So ensure that you get the correct answer. After entering all of this, we do not have further sales related transactions, so we got to balance it off. So as you could see, we only have information on the credit side, so therefore simply the total of the credit side will be the balance carried down to. So you will be getting 25,450 as the balance carried down on the debit side, and that will become the balance brought down to the next month on the credit side. So that's the end of part 2 of this question. Part 3 of the question. And the last T account that we have to do is the return inwards account. Return inwards is an expense account, Therefore, the opening balance when we enter 1342 should be on the debit side. So as you can see, on April 1st, balance brought down is 1342. And then we go through the journals. The sales journal doesn't matter to us, but you have to take the return inwards journal. The total you have to consider is the goods value, 350. So since it's an expense, we debit it. It's April 30th return inwards. Then we consider whether we have any other transaction to return inwards. Unfortunately, no. So therefore, we balance it off, which gives us 1342 plus 350 equaling to 1692. So if a balance carried down comes on the credit side, that becomes balance brought down the next month on debit side. Bringing into end part 4. Considering part B, it says, evaluate how maintaining a sales ledger control account benefits Justin in the management of his business. So when the question asks us to evaluate, we have to discuss the benefits and the drawbacks, or the good and the bad. But it is asking to evaluate how maintaining a sales ledger control account benefits Justin in the management of his business. So we have to argue on the benefits that the sales ledger control account bring about in managing the business and the pitfalls of it, and then we have to give the conclusion. So in this case, if you move on to the possible points, the maintenance of sales ledger control account will benefit Justin because it is easy for him to identify errors in the sales ledger, and he can prevent fraud because sales ledger control account is actually a control tool or a control device which is used to track errors. However, there is also a negative point connected here, because although the sales ledger control account helps to identify errors, there are 6 errors that are ignored here. The error of principal, error of omission, error of commission, complete reversal, and compensating errors. These are completely ignored here. Errors of original entry too. Secondly, it will be easy for him to prepare his financial statements because the total value of the trade receivables or debtors can be easily found. And finally, fraud can be identified, as I explained before, because control account is usually maintained by a different person or the software package will generate it. But the negatives could be it's time consuming, expertise skills might be needed, and using software packages could be costly. Overall, we need to give a conclusion stating that the preparation of sales ledger control account benefits Justin's business, although it has pitfalls in it. So along with that, we come to the end of question number 11. And up next, in my next video, I will be discussing 2018 June question number 12.